Hello, No Mediocre crew. Welcome back to another video. Today I'm with a good old friend, Devoid Davis. We went to high school together actually. Yes. Yes, so guys, today I met up with him because for some time now I've been seeing this guy all over social media talking about the importance of investing, how to make money and all them something there. So of course he caught my interest and I said, you know what, I need to get Devoid to come and talk to us more about like how to make some of that money, learn about the importance of investing and so forth. So Devoid, tell us something about yourself.
Oh, hi Shaniel. So for your viewers, because you know all about me already, but for your viewers, I've been investing now for about 6 years. I started on the Jamaica Stock Exchange, investing in like local companies like NCB, Sagicor, etc. And eventually that cascaded into me now investing in all sorts of alternative investments like cryptocurrencies, even like trading forex, or even buying real assets like art and commodities like silver and stuff like that. So I have a company that is called Caribbean Value Investor, and through that company what we do is we educate persons on how to invest. We teach financial literacy, and we also do analysis for persons on different investments that they can participate in.
Sounds good. So like you make a whole heap of money, man.
The money is there's money there. I'm not all of it ain't mine, but there's money there.
Oh, nice. Well, that's some of that money I want to make now, and I want my viewers, all the No Mediocre family, to start, make it.
I'll share as liberally as I can.
All right. So first and foremost, right? We all have goals that we want to achieve, and so in order to achieve that goal, you have to have the money.
Yes.
Right? Money talk. Right? Yes. But we want to understand now, first and foremost, what is investing, or what is when someone talks about they want to invest in something, what exactly is it all about?
Okay, so investing is primarily just the act of putting money to use in a useful asset that can either be sold at a future date for a higher price, or it can generate capital for you, as in it can generate more money for you. So one way of doing that is by getting back dividends, or even loaning out your money to get interest on it. That's a form of investing as well. Chiefly though, when we talk about investing, we're talking about putting money into an asset that is either going to increase in value or is going to give you back a return in the form of a payout, a dividend, or an interest payment.
Okay. All right, so I have some questions here for you.
Sure.
I'm just going to throw them at you, all right?
No problem.
All right, so firstly, what is the stock market?
All right, so simply put, the stock market is just like any other market. However, on the stock market, what are available for sale is what we call different companies, different equities. We call them stocks. So if you hear the term equity, stock, shares, it's all the same thing. What it means is that it's a certificate that gives you an ownership interest in a company. So the stock market is where you can go to purchase shares or stock in different companies.
Okay. All right, so if one decides to purchase stocks, right? How will they know which company is the best to purchase the stocks from,
Okay,
like we don't want to lose the money, we just want to get the money.
So all investment bears some form of a risk. Every single investment, there is no risk-free investment. In terms of understanding which companies would be the best to invest in, it's going to depend on a number of factors. So some of the chief factors that we look at are an investor's personal philosophy. Is the investor a risk-averse person that doesn't want to subject their money to the possibility of too much loss? is the investor a more aggressive investor? Are we dealing with somebody with a long-term time horizon? Or are we looking at somebody who wants to get the maximum gains possible within the shortest possible time? Most people tend to think that they are the latter, the person that I just mentioned, the one who wants to get the maximum gain in the shortest possible time. However,
that's me.
Right, but when you look at the risk
Yeah.
involved in those particular assets, in those particular types of investments, you might just shy away from them. So for example, if I tell you it's possible to say make 100% on your money in 1 month, but the downside is that it's possible to lose all of your money.
And that me know why here.
Exactly. So now we have to strike the balance between the investor's objectives, the investor's philosophy, and the expected returns that they can look to expect. So in answering your question, what's the best investment to go in, it's going to depend on you, the investor, putting your money, because in investing you want to do two things. You want the possibility to gain. So you want to get a return on your money.
Definitely.
But you first and foremost want to protect your money.
Yeah.
So you want to have capital protection, and then after that, capital appreciation.
Okay. So can anyone invest?
Yes, anyone above the age of 18 in Jamaica can invest, and that could mean investing in the stock market, or it could mean participating in alternative asset classes. It could also mean participating in a unit trust, which different companies offer. So for example, Barita or Sagicor offer what they call a unit trust product, where you as the investor, you don't need to become an expert at investing. What you simply need to do is just open the account with them, and you make the deposits monthly. They will then allocate the capital. They will then take the money and invest it in the companies that they think are going to give you the returns that are best aligned with your investment philosophy.
Sounds good. So they basically do the work for you.
Yes.
Nice.
The downside, like I said, everything has a downside, right? The downside to using like an investment trust or a mutual fund or a unit trust is that the gains are limited, in the sense that you will only get like the market average return for the most part.
Okay.
It is possible for you to get outside returns, meaning above average returns, but that's not the norm.
Even if you invest like a large sum of money?
Yes, even if you invest a large sum. So if you're investing in like a unit trust product, the sum that you're investing is not so much a factor, because it's a pooled investment scheme. So they're going to take your 10 million, for example, and then another person's 500,000, and then another person's 50,000, and it's that collective pool that now 1.55 million that's going to be 10.55 million that's going to be invested in the markets. And the return you're going to get is going to be the cumulative return of the portfolio itself, not necessarily in proportion to how much you invested.
Oh, I see. Nice. All right, on to the next question. What are the average profit returns for the stock markets?
All right, that's a very good question, leading from what I just mentioned.
Yeah.
So if you look at like a unit trust product, I just said that a unit trust product would give you like the average market return. The average market return is going to vary from year to year. Historically, it has been about it's been between 8 and 12% historically. In an exceptional year, however, you could see a market return in excess of 20%, in excess of 30%. In 2018, for example, when Jamaica had one of the best performing stock exchanges, the average market return was close to 35%.
Wow.
So if you had just given your money to Sagicor through an investment, through their unit trust product, you could have gotten back, the return you could have seen would have been about 35%. But that's one of those abnormal years.
So why me never do investment them time?
You see, investment also, so a good place to start with investing is exactly where we are now, with getting the knowledge, because you'd never want to invest in something that you don't have knowledge about.
True.
You are, the FSC will always tell you, investigate before you invest.
True.
So getting the knowledge is a starting point, and the market is cyclical in that it will have years when it overperforms and years when it underperforms. But as soon as you get the knowledge and can then get involved in the market, you're on your way, because now you get exposure to the possibility of being in the market in one of those years when it returns 30, 40, 50%.
True. So the earliest you start, the better.
Exactly.
Yes.
It's like planting a tree.
True. Give it enough time to grow.
Yes.
Yeah. All right. So, I'm not sure if you made mention of this before, but what are the risks of the stock market?
So good question again. Every time we talk about return, we always have to talk about
the risk. Yeah.
So we use a example earlier where we said, okay, do you want to be the guy who has a potential to earn 50% but lose 100%, or gain 100% but you could lose up to 50%? So the risk involved with the market varies. So it depends on a few things. So you have different types of risk in the market. There is a general market risk, which is that the market goes up and down because persons can be selling for whatever reason. There is also specific risk to different companies. So like a bank might face a bankruptcy risk or a solvency risk. Ultimately though, all of the risks are tied into the potential for loss. So the main risk in the stock market is the potential to lose your money.
Yes.
That is coincidentally the risk in all other forms of investment.
Sure.
So that's the primary risk that you face. And if you talk about specific companies now, then the risk will vary, and companies are actually mandated to tell you what the risks are.
Okay, awesome. How do I know what price to buy stocks?
All right, so that one is a technical question and I'll try to answer it as non-technically as I can. The price that, so every investment has what is known as a fair market price. So a fair market price is where the general public will accept that, okay, this is what is a fair price. So for example, for your car, you have a fair market value for your car if you're reselling it. If you bought a car for 5 million and you've had it for a year, you're not going to sell it back for what, 2 million or 2.5 million. In the same way, you couldn't command or you couldn't ask the market to pay 6 or 7 million for it, right? Yes. So the market is going to establish what is known as a fair value market price for the asset. In this case, we're using your car, but it also applies to a stock.
Yes.
So for a stock, that number, that price is going to be based on a number of factors. I'll use 3 key ones. Number 1 is going to be what is the potential return for that stock, say over the next 5 years. The second one is going to be how profitable the company has been historically. And then the third one could potentially be what are the risks that the company could potentially face. So if it's a company in, say, a high growth industry, an industry that's growing fast, so they can acquire customers and business can grow massively, the market might deem that company a little more valuable than, say, a similar company that is not in the same industry.
Yes.
Or a company that, say, doesn't have the same amount of potential for growth. So growth is an important factor.
Yes.
The second factor, risk. If the company is, say, a well-established company, then persons might be willing to pay a higher price for it. Persons are more willing to pay a higher price for, say, Grace Kennedy than they might be for a new company that just pop up and is selling similar products to Grace. And then the third factor, which is, well, we address a long-standing factor, But if you look at, say, the potential returns that the company can give you, how profitable has the company been? So this goes back to the long-standing issue. Grace Kennedy, we can see how profitable Grace Kennedy has been over the past 60 years. Grace Kennedy is over 100 years
Yes,
old,
yes.
right? So for a company like that, it's easier to establish a fair value price for
And
that
trust
company.
as well.
And exactly, exactly. So investing is about confidence
Yes.
as well, because you want to protect capital first and then grow it. So you might be more inclined to pay a higher price for a Grace Kennedy share than, say, a new company that's now just selling corned beef or whatever it is.
Definitely.
Right? So to answer, like I said, it's a technical question. The non-technical way to answer it would be, it's going to depend on what those three factors, on the grade the company has in those three areas primarily.
Okay, okay. All right, on to the next one. What are different stock market strategies?
All right, so now that we understand what the stock market is, and we understand what you can buy and how you can buy it, how you can benefit as well, we can talk about strategies, right? So to your question, there are about 4 or 5 major strategies that persons can use in investing. One might be the one that we use in my company, which is value investing, hence the name Caribbean Value Investor. What that means is we are looking to buy companies well below what the accepted market price is. So here's a scenario. Let's say Grace Kennedy, we accept that Grace Kennedy has a fair market value price of, say, $100. But let's say there's a fire or some legal issue that causes people to lose confidence in Grace Kennedy, and so they start selling off their Grace Kennedy shares because they feel that they're going to be losing money.
Yeah.
Right? So they start selling their shares. What the value investor will do is he will assess the financial statements of the company and be like, okay, yes, there is this scenario, there is this event that's causing people to sell the shares, but is it justified based on a financial perspective? Is Grace Kennedy losing significant amount of money because of this fire? It could be that their insurance covers the damage that the fire costs.
Yes.
Cost them, right? And so there is no material impact on the finances. And so you now being able to buy the shares significantly lower than what the accepted market price is means that you are now buying the shares at a bargain. That's the premise of what we call value investing.
Ah, I see.
All right, so what we're doing is we're buying things below their value. Quite simply, it would be like, for example, your car get a scratch, and
Yes.
now for some reason you say, okay, I don't like the car anymore. it's scratch. It's not as valuable to me. I just want to get rid of it. I'm going to sell it for $3 million. The average market price is still 5.
Yes.
So me as an investor being able to buy your car for $3 million means that there's a potential $2 million upside
out there
me
for you.
when I sell it. So that's how you look at your investments as well. So that's one of the strategies. Another strategy is what we call day trading. So that's where you as an investor, you'd be active in the market looking for whatever situation can cause you to, say, buy shares below what they're normally quoted for. Or you might already have gotten shares and you're just looking for some big news to come out that's going to cause everybody now to want to buy into this stock, and that gives you an opportunity to sell.
Yeah.
So that's called an active trading strategy. And then there is a third strategy that I tend to use. It's called the coat-tailing strategy. Now, typically, this is where you're following the, we call them the big institutional investors. So if on a normal day you see, let's say for example, normal trading in NCB is around 3,000 shares on average. Let's just say that's the average amount that trades per day. And in one day, for whatever reason, you hear that a big company is now starting to buy up NCB shares and they've now bought 10% of NCB. You could then question that and say, why would this company now all of a sudden buy 10% of NCB? There must be something there.
Yeah.
There must be something that they know that's going to cause them to benefit in the long run. And so you can, quote unquote, follow their coattail. So you ride on their coattail and you buy the shares based off that, even without necessarily having in-depth information, having the level of information that they might have had.
Yes.
The coattailing strategy is one that we advise one should use with caution, but it is one that can be very profitable, and historically it has been very profitable. So those are three strategies you can use. You can use a value investing philosophy.
Yes.
You can use a coattailing strategy, or you can use a day trading strategy in the stock market.
You hear that, guys? Wise man right here. Yes, Devoid. Thank you so much. That's all the question I actually have for you. Yes, you did an incredible job. We've heard everything which Devoid said, and I'm quite sure now most of you, if you didn't understand the whole concept surrounding investments, you actually have grasped some knowledge surrounding it now. So guys, it's important for us to invest. It doesn't matter what age you are, just go and visit your local banks to find out the procedure, and just get right into it. Thank you so much, Devoid.
It's a pleasure, Shindy. We can talk investments anytime. It's what I like to do, so, and it's what my business is, so I'm fully open to discussing it. And if any of your viewers have any questions, or they want to start investing, they want resources that can help them in starting, then my DMs are open, my contact information, I'll give it to Shanil, she can share it.
Definitely. So guys, I will give you his contact information. You can reach out to him and ask him all the questions that you want to ask. He loves to answer questions, as you can see. Yes. Alright, so that's it, guys. Remember, never to be mediocre. I vow to never be mediocre. He vows to never be mediocre. You should also vow to never be mediocre. Go and invest, guys, and get that money. That's what it's all about.
Thanks.